In today's video, we'll take a look at the DOW Futures and do a deep dive into all of the different setups that triggered today. We'll look at setups including the opening range breakout, we'll look at trend following strategies, we'll look at trend switches, and we'll take a look at our typical and common fade setup. So a lot of different setups in today's video with hopefully lots of examples for those of you that have a variety of trading styles. My goal is you get something out of today's video from any one of these setups. Now let's get started with the first setup, which is our opening range breakout. I'll come into a 1-minute time frame chart, and the opening range breakout inside of the Dow today was a little bit tricky. If I load in our opening range breakout indicator, and I'll set the trade entry time to be 30 minutes after the opening range ends, and we're using the first 30 minutes as our actual opening range, we take a look at what today looked like. And actually, instead of close above, we'll leave this as wick touch. We can see that the Dow triggered the opening range breakout with the series of 3 candle wicks. I thought that was particularly interesting. It almost seemed like one of those trades designed to trick people into getting into this trade by getting triggered through a buy stop. That buy stop order very quickly reversed. We came down to the middle, the halfway point of this range, before we then saw the Dow pick up. So if you use something like a half range stop, the Dow today was a stop out using the opening range breakout. If you waited a little bit more for a conservative entry, then you definitely had a nicer opportunity inside of the Dow. But otherwise, from a pure opening range breakout standpoint, a little bit tricky to trade the Dow today. So this was the first setup, which I think set stage for the rest of the day inside of the Dow and the shenanigans that we would see as the day progressed. Now, the second setup that we can take a look at involves using our volatility box. Now, inside of the Dow, unlike the S&P and the NASDAQ, we started off on our scalper volatility box models. The reason we chose the scalper as opposed to the aggressive, the doomsday aggressive, or any one of our other volatility models is because of what the Dow told us early on in the morning. The price action was chopping inside of our sign entry lines. We hadn't even breached the actual sign entry line, suggesting that there was more volatility than we would expect. If I contrast this with, say, something like the S&P 500, you can see something much more different here. Inside of the S&P, not only did we tag the sign line, but we even broke outside of our volatility box clouds. Very clearly more volatility inside of the S&P when you compare it to something like the Dow. Now, in the Dow, our first setup came in the 7 to 8 a.m. Pacific hour. So 1 hour after the market opened, that's when we had our volatility box breach. And funny enough, this also overlapped with that target for the opening range breakout setup. Now here, for our fade setup, we had all of our different rules met. Number 1, do we have a breach of our sign entry line? We got that as soon as this green candle right here broke above the sign entry line. Number 2, do we then see our overbought confirmation in this case? And that's this red arrow right here, our edge signals indicator. We also had that present itself, at which point our setup rules are met. We're looking for an entry at the sign entry line. Our stop is outside of the volatility box clouds. This distance right here is the amount of risk we give the trade, and that's what we're looking for our first target as well, which in the case of the Dow was about 48 points. You can see that right here, 48 points going slightly outside of the clouds. We had plenty of opportunities to enter this trade, and our target, just the first target, was hit in this move down towards the end of the hour inside of that 7 to 8 a.m. Pacific hour. So that was our second setup, which was the breach setup, our fade setup inside of the volatility box, where we had a real nice low risk trade here inside of the Dow with very little heat involved. That then took us to our next trade setup, which came in the subsequent hour with the series of 2 different squeeze arrows that we saw on our chart. These are the slingshot squeeze, and if I load in our actual squeeze here so you can see what that looked like, the overall idea was we were looking for this to build momentum and for the squeeze to ultimately fire long. That did not happen. Instead, we saw the squeeze fired short, and we saw that we had a trend switch here as well. Now that trend switch I thought was a lot easier to recognize using the red on the market pulse, which for the most part outside of the very early parts of the morning had mostly been green. So we saw a bullish trend for much of the morning. As we headed closer and closer to that lunchtime hour, go figure that the two squeeze arrows did not pan out. Instead, that squeeze fired short, and we saw the trend that was completely intact leading up to this moment right here reverse itself. So that gives us the trend switch. We can see the market pulse goes from green to gray to green. Now the periods of green are becoming less and less and less. If I zoom in, that should be a little easier to see. You can see how the green is dying down. One more time we try dying down. Our rules for this trend setup were met, but that completely failed to hit any sort of target. We didn't even see a bullish move as lunchtime hour crept in, and this trend switch happened. So that was the next setup there. For those of you that like to play these trend switches, the market pulse makes it really easy to see that. Now, after the trend switch, we knew very clearly that now the market pulse is red. We're in a stage of deceleration. This label here at that time was printing red, and the trend had officially switched. At this point, we started to get our trend continuation entries. Now, we had two entries during the lunchtime hour using the edge signals indicator. And we also had one with the slingshot squeeze, the same idea here, except this time we're looking for the momentum to fire short, which it did here, and it took us straight into the target line. Now, the lunchtime hour, I think, is a really tricky hour. Today, the trend continuation setups worked out, but this is an hour that we like to skip. We've done some research on this lunchtime hour. It's an hour where funky things tend to happen. I usually find it better to sit on the sidelines during this hour instead of trying to be a little bit more of a quote-unquote hero and try and catch some of these moves. But regardless, you can see examples of the trend continuation here, along with using the squeeze to try and play some more momentum-based moves, looking for price action to hit our volatility box levels. Now, towards the edge of this hour, the 9 to 10 a.m. Pacific hour, one more time, another example of a funky setup. We had yet another fade setup where price action breached our sign entry line. This was towards the edge of an hour, so no capital at risk, but we do get a chance to see free information here. Do the buyers come in and defend these levels, or do the sellers instead have full control taking price action outside of the clouds? And the latter is what happened here. You can see that the buyers tried, failed, and then we had price action break outside of our clouds. Once that happens, that's our sign that, hey, now the scalpers no longer doing a good job of containing volatility. We switch over, we adapt to volatility, and we switch to the aggressive volatility box. One more time, another example of another trend continuation setup, this time without the squeeze even supporting this move, just the edge signal, a bearish edge signal, so a bearish trigger with a bearish trend, really just looking for price action to continue trending down to the bearish side. Now that signal took us all the way into not only our volatility box target line, but also our actual sign entry line, where we're now looking to fade this downward trend here. One more time, the setup rules. Do we have a breach? Yes, that happens with this big red candle right here. Do we then see the edge signal confirmation? That happens right here. That tells us we're officially now in oversold territory. We're looking for an entry at the sign line or better, which we get in the very next candle. And if I keep coming forward here, the risk on this trade, same idea as what we talked about before, about 77 points. The risk has expanded now that we're on the aggressive volatility box. And one more time, we get the move to our target, fall short of target number 2, but we do hit T1 with little heat involved on this particular trade as well. Now, once we hit T1, we can see that the market pulse also starts to change color for just a little bit there. We go to a green market pulse. So an example of a failed trend switch here, which funny enough came as we were towards the bottom end of the volatility box. One more time, the buyers fail to have any sort of trend continuation here. The very next candle, price closes right below the market pulse line, and we can see the market pulse goes red before that hour even ends. Now in the next hour, we have yet another example of a trend continuation move, this time with our squeeze indicator. So let's load the squeeze back in, and we can take a look at what the squeeze looked like at this given time. So here we're looking one more time for this momentum to fire short. All of our signals are in play. We have a bearish squeeze signal arrow. We have a bearish market pulse with this red line. We've had a bear trend for quite some time, minus this one little blip, which very quickly resolved itself in the bearish favor. And if I zoom out and we take a look at this squeeze arrow, we can see that the squeeze goes through and ends up ultimately firing long. So another example of a failed trend continuation setup here, this time with the squeeze. So today the squeeze was a little bit tricky to play with here. We had moves where it looked like we were going to get close to our target line, but price action didn't really get as far as we hoped. Instead, we made just a little bit of move, and then we started to see 1, 2, 3, and 4 different edge signals overbought. Price action then bounced, we started to chop around, and the market pulse one more time went green. Now into the final hour, we started to then see a little bit more of a chop, and that should be a little bit clearer to see now as well. We go from this very consistent red to now being red to green here, back to red, back to green, back to green, back to red, back to green into the close, with the final rally that took us even outside of the aggressive Volatility Box's clouds, which then took us to the Doomsday Aggressive. One more time, you can see price just goes outside of the clouds before we see this edge signal arrow here. So we're continuing to adapt to volatility, and the conservative volatility box as well was broken, and that took us finally to our Doomsday conservative models, which is where price action closed for the day. So a lot of different setups, at least on that 1 minute time frame chart. And as you expand or rather increase your time frames, you'll see the probabilities also improve. The goal of the 1 minute was to be able to show you every little setup that triggered in itself today. The 5 minute market pulse here, I think, is a little bit cleaner and easier to see, where you can very visually see the market pulse being green to gray to a trend switch right here, which then holds itself all the way throughout the rest of the day before we have that final little rally. So I think for things like noting the trend, the 5 minute chart is really useful. For things like playing our volatility box fades, we need to zoom into something like a 1 minute time frame to get early enough entries. And for things like, say, trend continuation moves, the 1 minute is usually the nice time frame chart to play with. We have lots of opportunities where that works and gives you some real nice risk to reward sort of opportunities. But you also had places where we fell short of the target, which on that 1 minute chart triggered. But if we look at something like, say, a 5 minute chart, doesn't necessarily trigger as frequently. So hopefully through this video, you got a chance to see a bunch of different setups. You can choose the one that works best for your trading style. One more time, all the indicators we talked about, the edge signals indicator, the squeeze signals, and the volatility box, along with the slingshot squeeze. For all volatility box members, these are included for free with your membership. And for everyone else, you can download the Market Pulse for free and at least get a sense of this trend switch happening real time in a way that you can monitor. All right, take care, everyone. Good luck trading, and I'll see you in the next update.